Something very important just happened, and most people are missing why it matters. We just received major breaking news out of Washington that could reshape the future of the entire crypto industry, yet the market is sharply red across the board. Bitcoin is sliding close to 7%, XRP is down more than 5%, and fear is spreading fast. So the real question is simple but critical. If this news is genuinely positive, why are prices falling? What does this actually mean? And what is realistically going to turn this market around and push asset prices higher? Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Here's exactly what just took place. A U.S. Senate committee has officially advanced its portion of the Clarity Act out of committee. The vote passed by a narrow 12-11 margin, strictly along party lines, with no Democratic votes in favor. This is not a rumor, not speculation, and not social media hype. This is a confirmed legislative step forward. From here, the bill now moves into the Senate Banking Committee, which holds jurisdiction over the matter. That committee must review, amend, and act on the bill before it can advance to the full Senate floor. Only after that process can a finalized version be debated, voted on, and eventually sent to the president's desk for final approval and signature. As with all legislation, there are layers, procedures, and checkpoints, and each step takes time. But make no mistake, this is forward progress. Now let's address the part that has everyone confused. If this development is so important, why is the market selling off so aggressively today? On the surface, automated explanations point to a combination of macro factors. The Federal Reserve remains firm in its policy stance, holding interest rates in the 3.5 to 3.75 range, while signaling that cuts are unlikely until well into 2026. At the same time, geopolitical uncertainty continues to pressure risk assets, ETF outflows remain persistent, and overall investor sentiment has shifted toward capital preservation rather than speculation. As a result, money is flowing into traditional safe havens like gold, while Bitcoin slips below key psychological levels, and the total crypto market capitalization contracts by roughly 1.7%, bringing it near the $3.06 trillion range. There's also another factor worth mentioning that added fuel to today's volatility. The U.S. Senate blocked a government spending package earlier today, increasing concerns about a potential government shutdown. Events like this amplify uncertainty and typically trigger short-term sell-offs across high-risk markets, including digital assets. But here's the part that rarely gets discussed openly, and it's arguably the most important element of all. Beyond interest rates, politics, and headlines, crypto markets are still heavily influenced by manipulation. This is not new. Last year alone provided some of the most extreme examples of distorted price action the industry has ever seen, including what many consider the most manipulated event in crypto history around October 10th. These moves were not driven by fundamentals, adoption, or technology. They were driven by liquidity control, leverage exploitation, and strategic positioning by powerful market participants. This is exactly where regulatory clarity becomes transformational. The Clarity Act is not just about one token, one company, or one narrative. It is about changing the structural foundation of the entire digital asset market. The bill introduces a framework that would require the Commodity Futures Trading Commission to establish a comprehensive regulatory regime for digital commodity exchanges, brokers, and dealers. That includes mandatory monitoring of trading activity, explicit bans on abusive and manipulative practices, public reporting standards, rules addressing conflicts of interest, and clear governance requirements. These measures are designed to bring crypto markets closer to the standards used in traditional commodity markets. Increased surveillance, transparency, and oversight make it significantly harder for bad actors to operate in the shadows. For years, the promise of regulatory clarity has been tied to the idea that it would reduce manipulation, slow down predatory behavior, and push the industry out of its speculative phase and into real-world implementation and production. This is how innovation actually scales, when rules are defined and enforced. Right now, we are witnessing a familiar pattern. As meaningful progress toward regulation becomes more likely, the same entities that have benefited from chaos, uncertainty, and loopholes are repositioning. Liquidity is being shifted aggressively, volatility is being amplified. Large players and institutions that have controlled price action for a long time are making their final moves while the old system still allows it. This kind of behavior often appears strongest just before structural change takes hold. At the same time, influential voices within regulatory agencies are reinforcing this direction. SEC Chair Paul Atkins stated today that regulators are prepared to move forward and establish clear, functional rules for crypto markets. That matters. However, many investors are understandably cautious. Words alone are not enough. Action is what ultimately counts. And today, despite the red candles and negative sentiment, action did occur. A Senate committee advanced legislation that brings the industry closer to regulatory clarity than it has ever been before. Progress like this rarely moves in a straight line. It often feels slow, frustrating, and disconnected from price action in the short term. But structurally, this is how long-term market shifts begin. Regulatory clarity reduces uncertainty. Reduced uncertainty attracts institutional capital. Institutional capital changes market behavior. And over time, that is what supports sustainable growth. So while today's price action may feel discouraging, it does not negate what just happened. A key legislative step was taken. Momentum continues to build. The market is reacting emotionally in the short term, but the framework for long-term transformation is moving forward. It may not happen overnight and it may not be smooth, but the direction is becoming clearer by the day. Sometimes the most important developments occur quietly, right in the middle of volatility, when most people are focused on price instead of structure. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys liked this video, then be sure to give this video a big thumbs up. Thank you for watching.